What's going on, you guys? My name is Zach Hartley, and in this video, I'm going to answer the most common question that I receive. That question is, what time frame do I use when analyzing a stock? Here is everything you need to know. Let's go. Okay, so like I mentioned, I think this question is literally the most common question that I get, and it really comes up in my Discord chat a lot. So if you guys are interested in joining the Discord chat, asking me questions, and seeing any of my stock charts and my analysis behind the scenes, definitely consider signing up. The link is down below. Okay, you guys, so when we start talking about time frames, these are the time frames that I most commonly use, and these are the ones that I think most people use. Here we've got the candle on the front and then the chart at the back. So the candle is how much time one single candle represents, and then the chart represents how much time I'm basically looking at on the entire chart. And so starting with the absolute smallest, as far as I ever really zoom into a stock, is the 1 minute 3-day chart. And so that gives me a perspective on what is happening that day, and it also shows me the highs and lows that happened before today. And so that's as far as I usually like to zoom in. After that, I go to the 5-minute 1 week chart, and then the 1 hour 1 month chart. I zoom it out past that to the 1 day 6 month chart, and then the 1 week 1 year chart. Now obviously you can go in and out as far as you want. There's a full spectrum in between all of these levels, but these are the 5 that we are going to talk about today. You can use whatever works best for you, but the answer to the question is you need to match your time frames to the type of trading that you are doing. If you're day trading, you need to use shorter time frames and more zoomed in time frames. If you're swing trading, you need to be kind of in the middle. And if you're a long-term investor or a dividend investor or a value investor, you should never be looking at any of those zoomed in charts. You need to be looking at the 1 day and 1 week charts. And so the reason behind this is because the chart will look completely different when you change that time frame. Just here, right here, I took 2 screenshots right as I'm making this presentation, and they look completely different even though they're the exact same company. And obviously this is way zoomed in and this is way zoomed out to the basically 1 week, and I think this is like the 5-minute or the 1 minute chart. So obviously they look vastly different, and that's because you need to understand that you need to match your trading style to the time frames that you are working with. Now, if you're a long-term investor, I recommend that you look at the 1 week and 1 year chart, and then you zoom into the 1 day 6 month chart, maybe the 1 day 3 month chart, but you should not need to go any deeper than the 1 day, because you should not be making decisions based on where the stock is trading at within a given day. You should be making decisions based on where that stock is trading at on a week or 1 month or 3 month basis, not zoomed in that far. Your time is much better spent finding the next investment or rebalancing your portfolio or finding another dividend stock. It is not going to be zooming into the 1 hour chart to try and find the best time of day to actually get into that stock for a long-term hold. That is a waste of your time. However, if you're a swing trader and you're holding a stock for, let's say, anywhere between 2 days and 6 months, you might want to zoom in a little bit more. You might want to have a little bit more clarity and a little bit more in-depth zoom into that stock, because you might only be holding it for 1 week, 2 weeks, maybe only a couple of days. And so getting the best opportunity on the bounce off of a big level of support or right as it breaks out through a certain level, that's probably worth your time, because you're going to get a better return on it in a shorter amount of time. And so as a swing trader, you probably want to be looking at the 1 day 6 month chart or the 1 hour 1 month chart. You probably don't need to be zooming in a whole lot more than that. Maybe you go down to the 5 or 10 minute there, but you don't need to be going down to the 1 minute chart. You don't need to be zooming in like crazy. If you're a swing trader, you need to be making most of your decisions on the daily chart, and then maybe you zoom in a little bit if you've got some time to find the best entry point, but most of your decisions should be made on the daily chart. Now, if you're a day trader, this is when you should be zooming into the 1 minute and 5 minute candles, because the 1 week or 1 year chart is going to do absolutely nothing for you, because you're trying to get in today and out today. And so those big long charts don't do anything for you. What you want to see is the price action right now and where some support and resistance are from either pre-market or previous trading days. That's the information that you need as a day trader. So you don't need to be zooming back out to the 1 month, 3 month, 6 month, 1 year charts. You need to be focused on today and the last 4 or 5 days worth of trading, so that you can understand where the support and resistance is. Now, here are my tips. If you're a long-term investor, there is no need to look at anything shorter than the 1 day chart. You should not be zooming in past 1 day. If you're a long-term investor, a value investor, a dividend investor, anything like that, you do not need to be zooming in. Your time is much better spent finding a different stock, rebalancing your portfolio, or going out and working a job and generating more income. And all of the same rules apply to indicators. They are the exact same thing. The RSI is going to give you a completely different answer if you look at it on the 1 day compared to the 1 week compared to the 1 minute. And so when you're dealing with indicators and you're using them for trading signals, you need to make sure that you are matching the indicators to your trading time frames. You should not be zooming in or zooming out too far. You need to match the time frame to your style of trading. And remember that indicators are just a tool on your tool belt. They are never the reason that you get into or out of a stock. They're there to deny or confirm your assumptions and help support or reject your basically stock predictions. And so that's the role of indicators. They are not the reason that you get into a stock. Now, if you guys are interested in learning more about the charts, how to understand the technicals and actually read the charts and understand where to get in and where to get out, then you should definitely consider signing up for my stock market fundamentals course. It is completely free on Skillshare, and there's over 9 hours of content that walks you through step by step how to get invested in the market. And I promise you, it will be the best free resource that you can find online. There's over 2,500 students that have already gone through the course. There's 140 plus reviews for you to take a read through. It is hosted on Skillshare. There's over 9 hours of completely free content. Now, in summary, I'm going to repeat this just one more time. You need to match your style of trading with your time frames. You need to make sure that they align and that you aren't getting mixed signals. And those mixed signals that you are getting, you need to block them out and focus and make sure that what you're looking at aligns with your investing strategy, your trading strategy, and what you actually believe in and what your goals are. So if you guys get any value out of this video, please consider hitting that like and subscribe button. I sincerely appreciate it, and I will see you guys in the next video. Good luck trading, good luck investing, and we'll talk to you soon.